Good evening, ladies and gentlemen. Welcome to Admiral Markets Market Pulse Weekly Update, number 30 here for the 11th of June 2025. I hope you're all well. I hope you've enjoyed an interesting start to what has been an eventful week, as always, here in 2025. But that gives us plenty to talk about here on our weekly update. As always, hope that you can hear me, hope that you can see me. I appreciate that we have a wide range of experience of people who join us for our sessions, whether you're watching this live or later. Wherever you are in the world, okay, it is great to have you here with us. I appreciate some people are right at the start of their trading and investing journey. Others are very experienced. The interaction is always back. You can either put them. As always, we look to begin with a quick risk disclaimer. You can take a moment to make yourself aware of that, just always remembering that trading on margin does involve risk and that ultimately you are responsible for your own trading and investing decisions. So what do we cover on our sessions? Well, the whole idea of these sessions is to help you understand and analyze global financial markets. We do appreciate that it has been a rather eventful 2025, and if you're at the start of your trading and investing journey, it might seem a little bit overwhelming or intimidating. So hopefully these sessions will just help you understand and analyze those markets better so that, most importantly, as an investor or as a trader, you can turn this analysis to your own advantage in the way you engage with financial markets. And as always, we'll be sharing ideas on how you can trade and invest with Admiral Markets themselves. For those of you who don't know me, my name's Paul. Traded and invested for many years there. Traded for funds, traded for clients, primarily in my trading life, okay, my trading pathway. I tend to focus on trading FX, indices, and commodities. I tend to be a trend trader for sort of swing and position trades, and I tend to be a mean reversion and reversal trader for shorter term intraday traders. Whereas when I'm looking as an investor, I'm very much sector focused and very much intuitive in terms around of the rules that I use, and I will always talk about them and share them with you as we go deeper into our session. I appreciate, as I said at the start, that many people are at the start of their trading and investing journey, but they're also at the start of their journey with Admiral Markets. So a few slides to help educate you on Admiral Markets and how they can help support you. Admiral Markets are a financial brokerage that provide a wide range of financial instruments across various asset classes and also backing that up with a comprehensive education suite. In terms of that educational suite, there are regular webinars with experts like myself and others providing live market analysis. You have access to the premium analytics portal. You also have access to the research terminal, which will plug into both the MetaTrader 4 and MetaTrader 5 platforms. And there is a wide range of educational content that is available on not only the Admiral Markets website, but also the Admiral Markets YouTube channel. Those of you who are more focused on the trading pathway, to help you with your trading, Admiral Markets provide access to over 4,000 available instruments, available as FX or CFDs on commodities, indices, and stocks, providing a sophisticated trading environment with standard leverage for retail clients, allowing you to engage with markets using either MetaTrader 4 or MetaTrader 5, and also the Admiral Markets mobile app for those of you who like to trade on the go. For those of you looking more at a kind of a longer term investing and position trading pathway, well, you have over 4,000 available stocks and ETFs with Admiral Markets, providing also fractional investing in terms of fractional shares and fractional ETFs. There is an auto invest capability in the mobile app, And you have access to the platforms like MetaTrader 5, both as a downloadable version, a web trader version, and the Admiral Markets mobile app. Okay, so Market Pulse weekly update. I said at the start of the year, for those of you who joined us regular, that I thought it was going to be a rather eventful year, and I think that it is fair to say that it has been so far. And we're only halfway through it. We've still got a good part of 2025 to go through. But I do appreciate that, if you are at the start of your trading and investing journey, it might seem a little bit overwhelming. It might seem a little bit intimidating in terms of being able to make sense of not only the events going on in the world, but how they effectively play out in financial markets and how you can actually utilize that to your advantage. Hence why every week on the Market Pulse Weekly Update, I take a look at the major themes, the major news, okay, initiatives that are affecting markets at the moment. We do an analysis of the major global markets so that you have a good, broad understanding of what's going on. Always have a bit of a chat about trading and investing ideas and topics, and also an opportunity to introduce you to the technology solutions provided by Admiral Markets UK. Whole idea is to help educate you and also provide insight on global financial markets and the way that traders and investors can engage with them with Admiral Markets. Okay, so one of the things we always have a look at is understanding, what are the major week's themes, news, narratives, okay, from here, Wednesday, 11th July for the next week, up until next Wednesday, 18th of June. Because I do realize that, we now live in a time where you have access to unbelievable amounts of information. But once again, that can be a little bit overwhelming, a little bit intimidating if you're at the start of your journey as you're trying to make sense of all of this data and everything that's going on in the world. One of the things you need to understand and work with is understanding an economic calendar. If you're at the start of your journey, I don't expect you to be able to analyze the economic data, but it is important to know when it's coming out, because that kind of data, especially the high impact data, is likely to induce volatility into markets. When you're on the right side of volatility, that can make for a very good trading and investing session. When you're on the wrong side of it, it can make for a challenging session. So it is in your interest to understand an economic calendar. There is an economic calendar on the Admiral Markets website and elsewhere on the internet, so there's no real excuse. But also, once again, I realize that actually, even if you look at an economic calendar, there is a huge swathe of data that's coming out all the time. And so what I try to do is just break it down into the kind of important news elements for the next week or so that you at least want to be aware of. You might not be trading them, you might not necessarily be fascinated by them if you're a long-term investor, but as I said, it is important to understand when those pieces of data are coming out, because they might induce volatility into the market. So today, what we have had here, certainly here for us in the UK, we've had a spending review from the Chancellor of the Exchequer. She spoke up earlier today in front of the Houses of Parliament and provided her thoughts, ideas, and plan for the next few years. It was, very big on, let's say, very big on plans, very big on ideas. But of course, with all of these things, the devil is in the detail. And actually, what will happen over the next few weeks, we will find out what, if any, real sort of concrete detail there is for these particular plans within the spending review. But initially, people start to see that as quite bullish, quite positive in terms of lots of investment into the UK, lots of fiscal uplift in terms of spending on people and infrastructure that would perhaps be seen as being good for GBP and the UK stocks. Maybe we'll have a look at that later to see what the initial market reaction was to that. We also had this afternoon, we had CPI, we had the US CPI numbers, which were not as hot as had been forecast, but were still hotter than last month, okay? And this is what sort of gets traders and investors interested, because, of course, the how those numbers print will have a huge impact on next week's data, which we can see then Wednesday, 18th of June, as when we have Mr. Powell and the Federal Reserve have their FOMC meeting and decide upon the trajectory of US interest rates. Off those CPI numbers today, I think most traders and analysts and investors will be looking at it is unlikely to see a cut next week from Mr. Powell, despite what President Trump and even Vice President Vance has been sort of saying on the news wires this afternoon. They're sort of looking for cuts. At the moment, I think it's unlikely that Mr. Powell is likely to cut interest rates next Wednesday. But of course, a lot can happen in a week, okay? And of course, we will see what else we've had going on. And I appreciate for today, we're looking at data from the economic calendar, but of course, we now live in a world where there are layers of not only geopolitical data that can have influence on markets, but we also have, let's say, not only geopolitical, but also President Trump and his ability to communicate to the masses. And of course, the sort of major theme this week is that everybody's been watching and waiting for some real clarity out of the US-China trade talks that were happening in London. President Trump tweeted a little bit earlier today that it was all the deal was pretty much done and dusted, apart from himself and President Xi announcing on it, and of course that had an impact on markets as well. And we'll look at that in a short while when we switch across to the data. Tomorrow we've got GDP numbers out of the UK, and once again, people are going to be interested to see that. Okay, the jobs numbers on Tuesday were pretty poor, pretty weak, and people will be starting to see what, if any, impact the sort of Labour government's plans, policies, budgets, etc., are having in terms of things like UK GDP numbers. We've also got the PPI numbers out of the US and also unemployment claims tomorrow. Friday is quite a quiet day. Really what we just have in terms of the US in our afternoon, morning is the University of Michigan consumer sentiment and inflation expectations. There is a little bit of news on next Monday, but nothing really major. The next really kind of bit of major news we'd be taking note of is next Tuesday morning. We are expecting the Bank of Japan. They have their policy rate, their statement, and their conference. Once again, a little bit like the Americans and the FOMC. At the moment, people are not expecting a move, okay, or either a rise or a cut in Japanese interest rates, but they are going to be very, very interested to see what the governor of the Bank of Japan has to say about the impact of recent market moves and also the sort of tariff work that has been going through in terms of the Japanese and American negotiators. Next Tuesday, we have the German ZEW economic sentiment, and that is really just it's a confidence call on the German economy. So, of course, as Mr. Merz, the new Chancellor, gets his feet under the table, people are going to be interested to see, how is the economy looking? What can he work with? We also have retail sales out of the US, but retail sales and core retail sales. Once again, people are going to be interested to see how is the American consumer holding up again. Are they still spending money? Or is there a gradual slowdown in there? And retail sales can help give some insight into that. Next Wednesday, 18th of June, as I said, we have the FOMC meeting in our evening, actually at the time when we're on next Wednesday. But we also have UK inflation numbers. Once again, everyone's going to be very keen. We've got the unemployment claims in the afternoon for the US, and then later on the Wednesday, we've got the New Zealand with their GDP numbers. So a bit of a mix of data coming out across the board there, but most definitely some interesting UK data will be coming out. For those of us here in the UK, we'll want to keep an eye on that. And then, as I said, you've also got the Bank of Japan and the FOMC in terms of their policy statements. And even though we're not expecting movement in those two, and people will be keenly aware to hear what Mr. Ueda and Mr. Powell has to say in their statements. So there we go, plenty going on there. Before we move on to the charts, have a look at what's going on. You hear me see every week I like to set baseline of expectations. I think it's good for all traders and investors to have those. So always set some clear expectations, namely risk management is absolutely key, whether you're trading or investing. If you're at the start of your journey and still need to learn that element, okay, well then once again, go on to the Admiral Markets website or the Admiral Markets YouTube channel, and you will find there is plenty of content in there to help educate you and provide insight. Know what news is coming out for that week. That's one of the reasons why we do the session there and the slides before, so that you can get an understanding of when the big major data is coming out for the week ahead. Where possible, conduct your analysis before making decisions. And what I mean by that is that, very often, you start off at the start of your day, you might open your charts, lots going on, lots moving. It becomes easy to become distracted, tempted to sort of break your plan. So where possible, and I do appreciate it's not always possible for everybody, but, conduct your analysis before making decisions. So an example I use is for myself is that, I do a lot of work on the weekly charts, which I like. And most of that is done, my analysis is done over about a 2-hour period on a Saturday morning. No markets are open, okay? There's no distractions, no temptations. I can just sit and focus, do my analysis, and then I can make a plan for how I want to engage for the week ahead based off that. Goes without saying that you should ensure you have good internet connection and that you are rested and prepared before your sessions. And as a point to note, remember, for long-term trading and investing, we are looking to be long-only buyers through the invest.mt5 account with Admiral Markets. And for those of you joining us for the first time or just getting to grips with trading and investing, just to help you understand the charts when we switch across them in a moment, you'll find for the most part my charts are quite simple. They either have a blue or green bullish candles, a red bearish candles, and then you'll see there is a blue 20-period simple moving average, a red 50-period simple moving average, and a green 200-period simple moving average. Okay, the 200-period simple moving average is very useful for the sort of the weekly and the monthly chart, as we talked about in a session about 6-7 months ago on how to use simple technical analysis to operate as either a momentum or as a value position trader or investor. That video is available on the Admiral Markets website. Definitely the Admiral Markets YouTube channel. So make sure to, when you're next on YouTube, if you're not already, search out Admiral Markets. Make sure you subscribe. And you'll see all the previous sessions and also a couple of educational content elements on there. But I'm using those moving averages very simply just to confirm trends, okay, which helps for those of you at the beginning of your journey. And also I use them as areas of dynamic support and resistance, and actually bounces off those might be providing me opportunities to either establish a position or add to my position. I appreciate that many of you might be aware of Admiral Markets as a trading brokerage, okay, but also there is an investing account available for Admiral Markets where you can buy all of the UK shares and ETFs that I mentioned in this webinar. You can open that pretty easily. You can open an invest.mt5 account, log into your dashboard, either open the web trading platform or download the MT5 platform as I use. And then it's just like using a normal MT5 platform if that is what you've used in your trading experience. It is just using the same, but you have the opportunity to search and engage with UK shares and UK ETFs. Just remember that even though they are UK ETFs available to UK clients, there may not necessarily be ETFs of the UK, which we'll show a little bit later. They may be ETFs of American markets or other markets, but they are available to a UK client. So always bear that in mind. Okay, why don't we switch across to the charts now? Let's have a look what's going on. So just bear with me one moment and we'll switch across. So just bear with me a moment, ladies and gentlemen. Okay, so here we have the Admiral Markets MetaTrader 4 platform. Those of you who join us on a regular basis will know I tend to use the MetaTrader 4 for my trading, okay, for my trading pathway, and then use the Invest.MT5 for longer term position trading and investing. That works for me. Having those kind of hard boundaries is what helps me operate. It means I can have my rules, okay, and also I can know, how I'm operating, whether I'm operating as what might sometimes be a short-term swing trader as opposed to a long-term position trader or a long-term investor. Okay, so what I have also on here on my platform is, let's bring up the old drawing tool here. I have quite a lot of profiles. One of them here is on indices, and as the name implies, it is just really there to give me a snapshot of what I can see in the market. Let me just move myself out of the way. So I've got the Dow Jones on the weekly, S&P 500 on the weekly, NASDAQ on the weekly, ASX, the Australian index on the weekly, Hang Seng HSI 50, the Hong Kong index, the Nikkei, okay, which is or JP225, which is the Japanese Nikkei, the UK FTSE, okay, 100, and the German DAX there as well. I'm just going to quickly, so that's what I have, just so you can see. And as you probably heard me say a few times, is that the reason I kind of like that is because I can get a very quick snapshot of what is going on in the global markets. Okay, see if they are, as we can see here, in kind of bullish trends. Okay, so that there is a risk-on bullish sentiment. Okay, underpinning most of the moves. That gives me helpful insight. Or alternatively, if they are if correlations are breaking down, if there are particular instruments that are either leading or lagging, it can all help me to build a picture. But let's start with the US markets as always. So I'm going to look at the S&P 500. Here we are on the weekly chart. Let's just update these, okay, a little bit there. Bang. So listen, we can see, we continue to kind of, work our way, all right, regardless of all the news. Okay, so last week we had, Mr. Trump and Mr. Musk falling out. We had, of course, the US-China trade talks. We had NFP numbers being not as bad as people had forecast, but still not necessarily an exciting number. Okay, and yet despite all of that, we continue to, as old traders, investors, we continue to climb the wall of worry. And it might be easier if I go down to the daily chart. Here we go, onto the daily chart. After all of this volatility that we saw at the start of April, really for the last 2 months, you might say, we've just, as I said, just climbed that wall of worry. There we are, okay, climb that wall of worry. Now, today, at the moment, that is a little bit of a bearish pin bar. Might be an instance of the sort of, the data and other elements going on. But, really, on the daily chart, that longer-term chart is, at the moment, that is still bullish, okay? And that would be my bias there, okay? And the S&P 500 is bullish. What I'm interested to see is, does it have the energy within it to basically to reclaim these highs and then push on from there? That is kind of where I've been looking at as my sort of next target there, the recent highs. And as you'll have heard me say before, when price meets previous highs or lows, whether that be yearly, monthly, daily, weekly, etc. That is when I start to get interest, because I like to see how does the price react when it gets to those particular points and levels. And so that is what I see with the S&P 500 there. Now, if we look at today, just quickly while it's here, this is the 30-minute chart. Today has been rather sort of eventful there, okay? Rather eventful. We had, of course, we had information here coming out. We had, as I said, President Trump's tweets. We then had the sort of CPI data, followed by the US Open itself, as people digested the initial sort of, I would say, risk-on rally from President Trump's comments that there is a US-China trade deal. Okay, but you can see it didn't last very long, did it? It kind of, and prices sort of rolled its way over, and it's made for a rather interesting trading session this afternoon for those people who basically look at trading the American session. Which is interesting because actually at the start, the first couple of hours of yesterday here was very, very quiet indeed, right? Because people were waiting to hear the outcome of this US-China trade. So there was no really big major news, okay? But then also people wait to hear what was the outcome of the US-China trade talks. And as I said, President Trump's comments around about lunchtime UK, just in front of the US market open, gave it a nice big bump and a rally. But as you can see, it doesn't seem to be able to hold that up there. Certainly not on the S&P 500. And we see that a little bit with some of the other instruments. So Nasdaq, as you can see here, you know, boom. I'm just going to update that there a little bit, tighten that up there. That's the kind of recent highs of 2025. We can see, we're a little bit higher up than we were on the S&P 500. Okay, yeah, it's looking like on the weekly chart as a little bit of a rejection candle at the moment. But remember, this is Wednesday evening. This is a weekly candle. It doesn't really have any value until it closes on Friday night. Okay, but I can understand, having looked at the S&P, when I go down to the daily chart, as I said, it's climbing the wall of worry, regardless of all the kind of geopolitical events, okay, all of the uncertainty. These last couple of months, those markets are still grinding their way higher, aren't they? And if you're grinding that way and there's a clear trend, you hear me say it every week, you know, markets only trend 20 to 30% of the time, all right? So when they are trending and clearly trending and leaping off the chart at you, the best plans don't fight that. Okay, you don't fight that. You want to work with that, and you can see, as it pulls back, that has been the opportunity to sort of get on board these markets as they grind away. And I said, I will be waiting to see, does it have enough energy to basically drive it towards those recent highs? And when it does get there, if it does get there, how will that market react? And I think the Dow has been pretty similar as well. The Dow is kind of, of those three American indexes, I would say probably the Dow of the three we have here is probably the laggard of them. You can see it hasn't, whereas sort of Nasdaq and S&P are up here almost near their previous highs. That has not been the occurrence with that's not been the occurrence with the Dow. And if anything, we were kind of like, as I think I said last week, in a little bit of a block, just waiting for the US China, some real clarity there. But once again, if I go down to the daily chart, I look at this as price has been over the last sort of 3-4 weeks. Price has been getting real strong support there. Let's zoom in. It's been getting real strong support there from the daily 20-period moving average, hasn't it? It really has. And now we're above the 200-period moving average. Okay, we're above the 200. We're above the 50. The 20 is continuing to work its way higher. Once again, this is a daily uptrend, so you don't fight it when the trend is quite clear. That's it's good for you to have simple rules that you can follow, and that's certainly what we're seeing there with certainly those three indices are demonstrating that they are still remaining in bullish. Interestingly, if we look at this is ASX, which we don't really go often too much, but I think it's kind of of interest to me because you can see, unlike Dow, ASX has really rebounded very, very strongly, hasn't it? And this week we have got up to the all-time highs, the recent highs, okay, of 2025. Remember what I was saying earlier that, I like to see how does price react when it gets to those highs, okay? We can see when we came here first time, we came right up, printed a bearish key reversal, engulfing candle there, and then woof, didn't we move? And now, as I said, I'm looking right. Well, where are we now? What is actually, what is likely? When I go down to the 4-hour chart, to be honest, to me, right this moment, that looks like a double top. We've pulled away from the moving average, the 20, and we're printing a bit of a double top there on the 4-hour chart. And also, I'll be interested to see is, as we get towards the end of the week, does that carry on and roll over, okay, and work its way back down to, I'd say, back down to a kind of about 85, 70 area there. So, I would just be keeping an eye on that, okay? No, keeping an eye on that. Let's see if if that's giving us a heads up. When we look to be a little bit closer to home, starting with, let's say, German DAX, okay, on the weekly chart, well, we've just looked across the ASX and the three American indexes. ASX is back up to its highs. Dow is far off it, but Nasdaq is not too far. But actually, the DAX is above its highs. So, the DAX has been the real strong pullback there. Okay, real strong pullback's not the right word. That was a pullback. A real strong, move back towards new highs. And the weekly chart doesn't look as pretty, okay, I would say it doesn't look as pretty, and certainly when I go down to the daily chart, what I look at is, here we go, is that, we've just pushed away up there. I do wonder, after this, we printed a bearish engulfing candle here, followed by a bearish key reversal there, okay, printed a bearish, we washed out and then printed a bearish pin, but the last couple of days, we've sort of rolled over just a little bit there. I was intrigued here, sort of taking trades off the 20-period moving average. But I wonder if a positive outcome for US China could be at the expense of Europe and the expense of the DAX. That's one view. Okay, that's one view. That's one possible narrative. Ultimately, it still remains in a in an uptrend. I would be looking here and saying, well, actually, this would be my kind of my line in the sand that I would be watching and waiting to see. As long as we stay above there, I'd be saying we are remain bullish. If we break beneath it, well, then I would need to reconsider. A possible scenario. Possible scenario for me is we break that. Okay, we come back up to the 20, which then flips from being support to being resistance, and then if we form a lower high there, let's say like a rejection candle, well then working its way down there. That would be a possible scenario, okay? And that's absolutely fine. It's not me saying this is what it's going to happen. I'm just looking at the price action and using my experience, my analysis. So that's a possible scenario, okay? And if it was to do that, well, then invariably I would become very interested here, okay? That would be the way if it breaks this this recent fractal. So yeah, so it has pushed us high, but invariably, is this now starting to run out of energy? You've had one engulfing candle, two engulfing candle key reversal, rejection candle pin bar. Even if we dropped back to the recent highs to test, okay, that would not necessarily be a complete surprise. So I don't think there's any major European data, okay, over the next few days. So I think some of this will be based upon US data, okay, and perhaps Chinese data, because the Euro, Europe, and the UK, as we'll look at in a moment, they have done well recently, but a lot of that, I believe, and this is my personal opinion, they have benefited an awful lot from an anti-Trump, anti-US rhetoric in terms of both on equities, but also in the FX space as well in terms of the US dollar. So I'm intrigued to see if there is a really good trade deal between US and China. Does that come at the expense of Europe? We shall wait and see, won't we? But that's my thinking on that at this particular moment. And then close to home, let's have a look at the UK FTSE. So, I've been talking about how the UK FTSE certainly had been lagging its European neighbour in the DAX. And what we see, though, it is still like others climbing that wall of worry. If I go down to the daily chart, we can see that it has just been climbing that wall of worry. We talked about it, maybe it was showing up as a bit of a scruffy ascending triangle, and that's where we find ourselves. And once again, okay, we can see that higher about 89.10. And of course, I think of that is is that going to be a magnet that draws price towards it? And in which case, what will price look like when we get there? So if I look at that, we just looked at the ASX, which was providing a double top, wasn't it, at its highs? You might say the FTSE is doing that, but it's not as clean a price action. But I'd definitely be looking at that as a double top. What we've had here is the 20 and the 50 have been acting as real support. So long as they continue to do so, then I would be continuing to be my shorter term swing trading, be bullish, as I said, up towards that recent high. Okay, I'll be intrigued to see whether it has enough energy. And as I said, we've had the spending review today, and if I just let's look at the hourly charts on that. What we had was we initially had a bit of a bump beforehand. Okay, we had a bit of a bump beforehand, but then that was not really anything to do with the spending review, I would say. And actually, as Miss Reeves sort of announced her spending review, well, this is where we started to see the FTSE dip. We've had a bounce, and I don't think that's a spending review bounce. I think that is probably a President Trump announcing a possible deal bounce. But even that, as I said, hasn't really followed through. And the kind of price action looking there on the 30-minute chart this afternoon has been rather, let's say, it's been rather fraught, shall we say? Okay, for those of you who try to trade FTSE in the afternoon, okay, that has been a rather mixed session. So, a bit like I said on the DAX. UK and Europe have done well off the back of anti-Trump, anti-US rhetoric. If there is a US-China trade deal, does that have an impact not only on Europe, but does that have an impact closer to home as well? So, we've got just checking, we've got the kind of UK numbers, haven't we? We've got UK numbers in the morning, okay, and also then we've got UK inflation numbers next week as well. So maybe that'll be the thing that either I'll be looking to see, does it have what it takes to give us a pump towards the recent high in the FTSE, or are the numbers poor and it basically is a bit of a rug pull? It pulls out, takes the wind out of the sails of the FTSE. So yeah, you might be watching that to see how that reacts tomorrow morning into the data. So there you go. So there's a bit of a look at the indices there, okay? Climbing a wall of worry, still bullish, but one or two points that we want to sort of take a note of, okay? One or two areas that I would just be keeping an eye on to see whether they show any particular cracks. Before we go on to the US dollar, I know some of you love trading gold, so let's have a little look at how gold has been going on. Gold in the weekly chart, has been bullish trend as we've had that year of uncertainty. Uncertainty benefits gold, and it has done. Now, admittedly, we talked about, was this a bit of a bullish flag, and was it breaking out of there? And I was very keen, but if we go down to the daily chart, it's very keen here. Okay, there's an opportunity to be long gold. Okay, as we bounced off the 50 as part of that flag, and we broke out of it nicely. And we pushed our way up, and then invariably, we've come back. And I think I said this the other week, is that look at the price response to the daily 20-period simple moving average there. It's acting as support and it's turning up again, isn't it? Now, once again, this is kind of links into the bigger frame in terms of, I would be very intrigued to see how gold plays out. And the reason being is that gold, as I said earlier, does well off uncertainty. If there is a US-China trade deal, well, then a lot of that uncertainty goes away, which I would feel is probably bearish for gold. Or there are details that we all get caught up in and nothing really gets agreed for a while, in which case people do get a little bit nervous, a little bit uncertain, and that is good for gold. So I think watching this over the next day or two might give us a good sense of the market's reaction, okay, to the US-China trade deal. What President Trump has said, okay, and how markets react to it could be very different, and I think gold might give us a sense of that. So I'm curious. The daily chart is finding really good support off the 20-period moving average, and I'll be intrigued to see, does that hold true? Does that maintain? Bang, US dollar. Let's have a look. As always, we look at the global indices and gold, dollar, and then UK GBP, and then UK stocks. Okay, so you've got a good broad global, honing in and finishing off on the UK. Excuse me. So this is a profile on the US dollar. Okay, so I've got US dollar index there, but then also Aussie dollar, Euro dollar, pound dollar, dollar Swiss franc, Kiwi dollar, dollar Canadian, dollar Japanese yen. Okay, all of the majors. All right, all the majors against the US dollar. Now, I remember those of you who joined in the last week too, and we said it was the start of the month, and we were looking at monthly candles. Let's just go down a little bit and have a little look at the weekly candles here, how they're showing up. Okay, what that is actually telling us. As I said, I'm always looking to get an idea and insight into what is occurring, and I will start with looking at the dollar index. So, dollar index, yeah, big sell off. We had a little bit of a bounce, but it didn't follow through on it because we had invariably difficulties that have just basically taken them lower, and that is where we find ourselves. And just looking at here on the daily chart, I'm just going to draw in a level here. Just drawing a level here around about 98.50. That's where I'm intrigued. Okay, at the moment. Let me just make it a little bit of a small, not as strong. I just need to. There we go. So kind of talked about how I thought we were in a bit of a range with the US dollar between 100 to 98.50. Certainly we continue. All right. Certainly we continue. Okay, to be a little bit on the bearish side. I was intrigued to see if we were breaking through this swing point, whether that was going to sign. But we can see, I think the data today has, has not been great for the dollar. And if I go down to the charts, yeah, we can see this the hourly chart, and really from from the kind of comments of Mr. Trump, then the CPI data, we've seen that bit of a sell-off there, further sell-off in the dollar. But going back up to the daily chart, I said I still see us in a kind of, at the moment, a little bit of a range between 98.50 and 100. I'm not surprised to see us going back down to retest it. Remember what I was saying earlier? I always want to see, what price does when it retests, existing levels or important levels. I want to see whether, if it breaks through, excuse me, and closes beneath and stays beneath, well, to me, that is very bearish dollar, which means I can look at strength elsewhere. Or alternatively, it reverses here, and this becomes, kind of a little bit of a 98.50 level, but then even if it reverses here, for me, I would need to see how the 50 acted as really great dynamic resistance there. It's cutting through 100 now. I'd need to see a price above the 50 and above the 100 to have dollar strength, okay, to change my narrative. That's the way I'd be looking. So I'll be intrigued with some of the data we've got coming out, okay, over the next week, as we run in towards the FOMC meeting, to see how that occurs there. Maybe that sell-off today is because the CPI data was higher than last month, but not as high as forecast. So it means that whilst maybe Mr. Powell isn't going to cut next week, there might actually be a new pathway that does involve cuts in US interest rates, which naturally would, by their very nature, be bearish for the US dollar. So let's watch this over the next couple of days and see how it reacts to that kind of 98.50 level. So dollar remains bearish. So if dollar remains bearish, I want to see, well, what's that telling me about other markets? So, of course, we're going to look at euro against the US dollar. And euro against the US dollar the last couple of weeks, having had this really strong rally, we fell back a little bit, but then the last few weeks we have continued to work our way higher with euro strength. I am curious, I'm interested in, I'm going to draw in just 115, okay? And I'm just going to, so of course, in my as my role, trading and trading, markets, FX, indices, commodities. At the start of this month, okay, or the end of last month, start of this month, I was reading a piece by let's just say, by a large investment bank, who sort of basically, their huge teams of analysts said that they thought there was absolutely no way that euro dollar would get to 115 this month. And as you can see, we are pretty much tickling the soft underbelly of it. In fact, today we traded as high as 114.99. So that is euro strength, dollar weakness. And the reason I mention that, okay, is just to reaffirm for those of you who, as I said, you might be at the start of your journey, or maybe you've been doing your own work, analyzing, trading, engaging with markets. And of course, sometimes, when you're at home on your own trying to do that, or, you might feel a little bit that you are in the blind, or, perhaps you're not as capable as, let's say, the large investment banks with, huge teams of people poring over reports, trying to do their analysis. But the ultimate thing is that, even the big investment banks can be wrong. The hedge funds can be wrong. I can be wrong, all right? It just becomes that as you develop, okay, you become better at analyzing markets. The more you practice at anything, I always say to new traders, investors, that using technical analysis like this, it is like it's like learning a new language. Okay, it's like learning music. Being able to read a sheet of music. The first time you read a sheet of music, it just means nothing to you. It's just a lot of squiggly lines on a piece of paper. But the more you practice, the more you understand it, the better you become, till you get to a point where you can read music. And it's the same with doing your own analysis here. When you're doing this every day, every week, every month, the more you practice at it, the better you become. And as I said, you should get to a point where you can trust your own analysis. Okay, that you don't need to rely on other people's analysis. That they can help you, they can provide a bit of insight, and maybe draw your attention to pieces that you had missed. But ultimately, it is about your own analysis is what needs to what you need to work from. But anyway, as I said, the investment bank thought it wouldn't make 115 this month, and as I said, we were literally less than one pip away from it earlier today. In fact, it wasn't even early today. It was actually just a short while ago, as you can see, and you can see that that has been that's a 30-minute chart. Just look at that. Euro strength, dollar weakness there. Okay, that's really sort of pumped its way there. And you know, I wonder whether this is kind of the last throes of the last throes of the sort of anti-US rhetoric. Because I wonder if this is the last push or the last throes of it. I'll be intrigued to see how this ends over the next couple of days. How this whether we break 115 or whether it becomes an interesting line in the sand. So, but that is just all it's doing is just confirming that we still have an element of euro strength, dollar weakness, and that's absolutely fine. That's what we want to be able to do, to work, to understand, and you can see it here across the others. All right, Aussie against US dollar, that is Aussie strength, US dollar weakness. Kiwi dollar, that is New Zealand dollar strength, Kiwi US dollar weakness. The US dollar against Canadian dollar is down. That means US dollar weakness, Canadian dollar strength. Euro against dollar, we've said, is strong. Dollar against Swiss franc, okay, that is dollar weakness, Swiss franc strength. Dollar, weakness, dollar against Japanese yen, that is down. Dollar, that is dollar weakness, Japanese yen strength. And pound against dollar is the same, but we'll look at pound against dollar in a moment anyway. We're going to switch across. The interesting one is, I think, pound against Japanese yen. I'm just curious, it's kind of 142 level. I'd be looking at this here now. Let's just bring this in. I'm going to, as I say every week, I'm a better trader than I am an artist. So sometimes excuse my my drawing, but I look at this as are we just coming into a little bit? Are we coiling up here? Okay, are we coiling up here? And dollar against Japanese yen. Remember, next Tuesday we have the Bank of Japan. Next Wednesday we have the FOMC. And even though we are not expecting movement from there, things can change, and if they do change, that will induce volatility. And so I wonder whether, just looking at dollar yen, whether that is just starting to coil up a little bit. If we go down to the daily chart, just coiling up a little bit. When I see price wrapped up with the moving averages and I see it for a few days at a time, I start to think, well, okay, we're just basically coiling up here, okay, before we get the clarity from the central bankers, and then we'll get the next move in dollar yen. So, you might just want to add that to your watch list in terms of understanding, what we are likely to see over the next few days with dollar yen. Okay, so there's US dollar. Let's have a look at sterling, British sterling, and then we'll have a look at a couple of UK stocks and see what's been going on there. As always, I appreciate I'm always just flying through a little bit because I'm just trying to cover as much as I can in our time together. I want to be able to share as much help and insight as I possibly can that you can utilize. I appreciate some of you will be trading and investing all manner of instruments. Some of you might only be focused on a few, and that's absolutely fine. But hopefully, this gives you a little bit of color, a little bit of flavor, a little bit of view of the landscape of the overall global markets. Okay, so bang, bang, bang. Once again, here we go. This is a profile we have on UK sterling. So pound against US dollar, okay, on the weekly, euro sterling on the weekly, pound Aussie, pound Canadian dollar, pound New Zealand dollar, pound Swiss franc, and pound yen. Okay, so the condols are of interest, okay, but I think using our time, I'm kind of wanting to focus on the cable, pound yen, and of course always pound Swiss and euro sterling. Pound against US dollar, weekly chart, that has continued to be a strong move, even though when I thought we might have been running out of energy here, we continue to push, got above last year's high, and so far have held above it, haven't we? And if we go down to the daily chart, I talk about this all the time, when markets flip resistance into support, and that's what we had there, okay, a little bit of a flag pattern, it's worked its way up. Interestingly, that 20-period moving average, okay, is acting as support at the moment. So we are above last year's highs, okay. I wonder if that is a bit of a double top, but at the moment, I'm just working with it. That is sterling strength, dollar weakness, okay. That's what I'm working with, okay. I had a little bit of a trading at this morning, right? But what we're looking at here is we've had spending reviews today, and so we've had US data, and we will continue to have both UK data and US data over the next week. So it would not surprise me if pound against dollar was just a little bit volatile, a little bit choppy over the next few days until we get some real clarity on that. Pound against yen is kind of another one that's intriguing me, because I'm just going to draw this up. We kind of drew this sort of trend line from a while back. And on the weekly chart, we had this risk on rally, okay, relief rally. And then you might remember I was talking about how I was intrigued that we had these kind of the two pin bars here off the 50, and I wondered, were we going to get a rollover? You can see where the counter trend line or this trend line was. But actually, what we can see is, last week and this week, we've kind of pushed our way up to it, haven't we? If I look at the daily chart, we've pushed our way up to it, okay? Which would indicate, for me, a case of pound being strong is a bit of risk on. Yen weakening, that is equally a bit of risk on, okay? I thought we might have a double top here, but actually it's now looking more even like a triple top. This is a bearish key reversal, bearish pin bar, bearish high wave indecision candle. So I'm looking at this around about 196. We seem to there is a definite level of resistance there. Okay, so once again we've got a bit of UK data. Is that going to make a difference? And then Tuesday we've got that Bank of Japan data, and that might be what squeezes us in terms of looking at the markets. Certainly, interestingly, the way I look at this is a 30-minute chart from today through the Asian session and the UK session. We were pretty much inside that range. It's only as we got all to these conversations around the US session, around President Trump about the US CPI data, that actually we got to see how we got that volatility there in pound against Japanese yen. That's kind of what we're looking at there. If we look at pound against Swiss franc, those of you who've joined me for the last few weeks, we've talked about this in terms of, this collapse was risk off. This is the relief risk on rally. And then, I've talked about when we go down to the daily chart, how really we have just been in a range. I'm just going to let's just draw shapes in there, okay, just to give us a bit of bang. Hopefully you can just, give you a bit of an indication that really for about the last, almost like it's getting towards a month, we have just been in that tight range there. Now, my own FX model, the STAN, tells me that both sterling and Swiss franc are number 1 and 2 in terms of strength. And so it's not unusual when you're trading strength v strength that basically the price just goes sideways because they are just literally, fighting each other. The way I like to trade is I like to trade strength v weakness or sell weakness by strength. But also, I think, as I said last week, I look at this as also a bit of a risk barometer as well. So we've got pound, which is normally a risk-on currency, Swiss franc, which is normally a risk-off currency. So I'm sat here waiting to see if we get a pump higher. That would be sterling strength, Swiss franc weakness. We're risk-on. If we get a pump lower, that is sterling weakness, Swiss franc strength. That would give an indication that we are risk off, and so I would adapt myself accordingly. But at the moment, you can see. Oops, excuse my drawings. You can see that is in a very tight period of consolidation, isn't it? Not really anything really terribly exciting going on there. We're just watching and waiting to see, what decision it makes in terms of what are we risk on or are we risk off. If we do have a little look elsewhere here, this is euro against sterling, and I've talked about it for months here, but about the power of the weekly 50-period moving average and how it's acted as some fantastic resistance. And then we flipped it to support, didn't we? We flipped it to support where we had this 3-bar reverse with a nice bullish pin bar closing above the 20. Last week wasn't too exciting at the time, but you can see this week we've had a bit of that sterling weakness now. Here we go. On the daily chart I looked at, we're at the daily 200-period moving average with that bullish key reversal there. And you can see we've just slowly worked our way up. Now, of course, some of the news that was kind of not terribly that went on whilst the spending review was being broadcast to the nation was that, we understand that the Foreign Secretary, Mr. Lamy, has handed over control of the border of Gibraltar to Spain, pretty much like they sold off Chagos and probably the Falkland Islands next in terms of selling the family silver, and that will have added to a little bit of euro strength, a little bit of sterling weakness. Okay. And that's what we're seeing there. For me, for this to continue higher, it has to get above this daily 50, doesn't it? It has to get above the daily 50. And I'd be intrigued to see how that works. There's certainly, it bounced up to it this afternoon, but it's just kind of come off there. And that's the 30-minute chart. But for me, if it bounces and gets above there, that is euro strength and sterling weakening. if it falls back to that 84 number, then invariably that would give an indication that euro is weakening as well. All right, so there's a little bit of insight into sterling. Let's have a quick switch across for the last couple of minutes to the Invest.mt5 platform here. We've had there's been a little bit of an update to MT5 here in terms of how you can utilize it. You can draw your own conclusions about how well you particularly like that. Let's just get rid of that. But what I have here is the research terminal, okay, that you have access to as a client. It has a let's move these out of the way as well. Kind of broad range of what you can use it for in terms of looking at the details, okay, for what's coming up news wise, the impact. If I can just basically even just look at high impact, okay, even if I can do that, here we go. So high impact news, okay. So tomorrow we will have the natural gas storage report from the US. As I said, we've got GDP numbers, we've got US PPI numbers as well. And also probably less impact, but German balance of payments and Dutch CPI. But you can use basically the filters to help you understand that. As always, you can filter assets just looking at their sentiment indicators. So we can look at bang regions, EMA. Look at that. There we go, and just apply that, and then we can sort of look. So, for example, Anglo American PLC, which is a UK company, gives you indication on the on sentiment, okay, in terms of how popular or unpopular a particular instrument might be. Also look at the calendar. I have filters on here, but let's just take these off. Let's cancel them all. Oops, he says. So I'm going to clear them all so you can show how to look at this. So this has got all the kind of data coming out. So for those of you who like to also trade and invest in American companies, okay, we're getting Oracle data, which should be out shortly. Okay, I think it's coming out this afternoon after the US market closes, and you can get all the data that you need and want there. But here we go. What I'm going to do is I'm going to filter this into regions once again. EMA, okay, super. I'm going to look into basically FTSE companies as well. And you could even go further down into sectors, okay? I don't particularly need to, but I can just basically utilize that to help give me just a bit of insight into who's coming out. So certainly for Scottish Mortgage Investment Trust, their dividend date is tomorrow, all right? But actually, what I'm really interested in is looking at is Tesco. Tesco have their trading. Their statement, their conference call, okay, and that's people will be interested in Halma. They always seem to be putting up forecasts. And then on Friday, we've got data from Admiral Group. Now, I just have to be very clear, Admiral Group and Admiral Markets are two very, very different companies. Admiral Group is a UK insurance company. I just want to make that very, very clear to people. All right, as opposed to Admiral Markets, they are two very separate entities. Whilst they are both operate in finance, they are very, very different organizations. I wouldn't want people to confuse one with the other. That's not particularly that's not what we're looking at. So with that in mind, let's have a quick look at some of the stocks. So this is VUKE, okay, VUKE, which is the kind of Vanguard FTSE 100 ETF. And so it replicates the UK FTSE 100. Interestingly, on the actual ETF, we can see that actually, we have been pushing higher, which is when we looked at the UK CFD trading is not the case, okay, but maybe this is an indication of sort of this is leading in terms of what it's looking at and where the let's say, because ETFs, people are generally holding them for a longer period, maybe a bit of an indication of some of the some positivity, okay, in terms of, if not positivity for the kind of government policies, positivity in terms of it being the anti-US trade along with Europe there. Even when we look at VMID, okay, which I've said is in many ways a more useful insight into the UK economy. What we see, VMID is the ETF for the FTSE 250. And really that had been lagging behind for a good while, but you can see that actually, we have kind of rallied quite strongly there, haven't we? We have rallied quite strongly there over those few weeks. So that is in itself giving us just a bit of insight into those particular those particular elements. Okay. What I wanted to also have a little look at is because, of course, last week we had the UK Strategic Defence Review. Today we've had the Spending Review talking about their commitments for defence. And, of course, that has an impact on some of those stocks. And, what we've been looking at is that British Aerospace, if I go up just a little bit more, British Aerospace has still been very strong, maybe a little bit coming off this week, so just taking some profits. But what has been immensely strong is, and what's continued to be, and ever since we talked about it round about here last summer, this is Rolls-Royce. Okay, and part of this is because Rolls-Royce is strong because of its demand for its aero engines, but more of interest to us is in particular, okay, some of its defence work, and in particular, what was from today was that the Chancellor announced that there would be investments in nuclear and that they would be choosing the Rolls-Royce, I think it's SMR, small modular reactor, to focus on. And so, as you can see, that basically has just continued that over this last 22, 24, it has been just an outstanding run there. Okay, long-term run there for Rolls-Royce. And there's, as you hear me say all the time, okay, markets only trend 20 to 30% of the time. A good trend leaps off the chart at you. When you're in a good trend, you don't want to fight it. You want to find a way. What is the way that I can serve this? Think of yourself like a surfer. How can I serve this? We talked about, a good few months ago about whether you were a value, okay, or whether you were a momentum. This is most definitely a momentum play, and a case of, well, actually, how can I utilize my skills to be able to take a piece of that? And so, that is it's a fantastic chart for us to finish on this evening. As I said, unfortunately, time flies when you're having fun, and we have run out of time. As always, I appreciate that. I do appreciate that. I fly through as much as I can do because I want to share as much as I can. Okay, in terms to help you get a little bit of insight and understanding of what's going on in the market. I hope you found that useful. I hope that gives you a little bit of help. As always, I wish you the best of success in your own trading and investing endeavors for the week ahead, and I hope you'll join us next week, Wednesday 18th, for our next session. And until then, trade and invest well, everybody. Many thanks.